In this video, I wanted to discuss our new Golden Blackhawk Expert Advisor. And as the name might suggest, Blackhawk is a really great night scalping robot, which has been specifically designed to trade the gold markets. So, diving in, what is night scalping? And night scalping is really essentially trading a particular market, be it commodities, currencies, or indices, around the time that the market is about to close. And this isn't usually the night, actually, it's more early evening, late afternoon, depending on your time zone, but it's around 5 p.m. Eastern Standard Time. So at least with the gold markets and quite a few US equity markets, 5 p.m. tends to be market close, or in the gold market specifically, 5 p.m. is market close. And between 5 and 6 p.m. the market is shut, where all the reconciliation can take place and all the institutional traders as well as exchanges can effectively get their ducks in a row for the next day. And before this hour, so before 5 p.m., we usually have very, very slow price action. So between 4 p.m. and 5 p.m. Eastern Standard Time, and usually after the market reopens at 6 p.m., so between 6 p.m. and 7 p.m. Eastern Standard Time, usually the market tends to be very slow. And there's a few different reasons for this. Both there is an actual pause in the underlying futures markets, including the gold futures markets, for a lot of these historical as well as just rebalancing purposes. And there's also even some very fundamental drivers behind it. So for instance, between at 5 p.m. or 6 p.m. or 7 p.m. Eastern Standard Time, you just happen to be at a certain time of the day where not many big traders are trading. So if you are in Tokyo, you perhaps are just waking up, and a lot of the large institutional traders more in the Asian part of the world are just getting started with their day. Europe should be very fast asleep at this point, so a lot of the London traders or the Frankfurt-based traders are likely sleeping. And this is kind of the end of the day in the Americas, so a lot of the more New York institutional traders are going home. And you could argue that nowadays most trading is electronic, so is this as relevant? And I would say that there's really two big points to consider. At many institutional firms, even if algos are taking the actual trades, quite often there needs to be a supervising team to make sure that the computers are behaving as they should. And this can either be a few people or it can be a full risk management department. Therefore, there's still an element of more trading volumes happen during actual business hours, depending on the jurisdiction. At the same time, a lot of non-speculators, so big producers and consumers, are far more likely to transact during times which they are actually at the office. And then there's a whole other element of different news and fundamental events which also happen during more business hours in the major different zones. So this kind of window between around 5 p.m. Eastern Standard Time to around 4 p.m. Eastern Standard Time to around 7 p.m. Eastern Standard Time tends to have very low volumes. And I would encourage you to go look at any of your charts, and you can effectively see that usually during these hours, volumes tend to be the lowest of the entire day. And correspondingly, as volume is really low and there's not really a ton of fundamental drivers pushing the market in any direction, there usually is very little trading activity and the market just tends to move sideways. So the whole concept of night scalping is really based on this. Essentially, we're identifying a time of the day where the market really just moves sideways. So if there's a significant deviation from the mean, a relatively significant deviation relative to normal moves during this time, usually that's kind of an anomaly and it should revert back to the mean. And that's the underlying premise behind night scalping. And to go into a bit more detail here, the concept of mean reversion is one of the kind of hallmarks of any sort of trading strategy. And effectively it shows that if there's a significant deviation from the average price, there should be a return to that mean. So here we can see if there's a spike and it goes into a relative high, it should then revert back to the mean. And if it goes to the relative low, inversely, it should also revert back to the mean. And effectively, this is the premise behind many popular trading concepts, including the RSI or Bollinger Bands or the stochastic indicators. So it's a very well-known and tried and tested category of strategies. But I have found that this is very effective when combined with more of a night scalping approach, because If you try and trade mean reversion during a breakout time of the day, like at New York Open, chances are if something goes into the relative high zone, it will just keep going until it's even more relatively high. But if you do try and apply this approach during more of a quiet time, this mean reversion premise can actually work quite well. So to kind of get into what I want to chat about today, our Golden Blackhawk Expert Advisor, why it's a bit different than I find quite a few night scalpers on the market is it's based on price action. Because most mean reversion systems tend to be very indicator heavy, because there's just so many indicators which work really well in mean reversion, or which can be applied to mean reversion strategies. Like almost every oscillator or channel-based indicator can be used in a mean reverting way. And Blackhawk does use indicators, but it uses them as filters, not as the actual trigger. And the reason why that, in my opinion, is far more effective is because indicators can make two very different pieces of price action look extremely similar. Whereas if you have a very logical price action based premise, I find that it tends to identify much better setups and lead to a much more consistent, non-over-optimized strategy. And one more thing that makes Golden Blackhawk very unique is that it actually has an AI model behind it, which helps to assess the probability of each trade, and then doesn't necessarily filter or block out trades, but actually scales up lot sizing based on the probability output by the model. And why this is quite unique is if you ever listen to a lot of professional traders speak, they will often tell you that they don't bet the same on every single trade. Like Lance Breitstein is a great example of this. They try and scale their lot size depending on how likely they believe that trade is to be. And it's much harder to do this with a bot because you don't have discretion. So how do you know what is more likely? And fortunately, many machine learning models, and in this case, I used LightGBM by Microsoft, they output a probabilistic reading based on how you train them. So here, essentially in Blackhawk, they've been trained to identify the probability of the trade being a success and then scale the trade size accordingly. And one more thing which I wanted to actually mention here before we keep going is the actual trigger for Blackhawk is that it's looking for an impulse away. So this is I believe this is a 1 hour chart, so it's not super relevant, but to illustrate, it would be a big impulse away on a very low time frame. And then it's looking for a rapid rejection where it's going to go back to the mean. So what this would look like in practice is likely a big candle projecting away from an average or more like a range, and then a quick pullback backwards. And that's when Blackhawk would enter the trade. So we can keep going here. And we can see that the Blackhawk has performed exceptionally well for the past year with roughly a 50% return with a very low 7.38% drawdown. And something which makes this a particularly unique strategy is that it's really good as a hedge to other types of gold trading systems. Because most gold trading bots are breakout based, or they're trend following. So they generally do well when gold is in a very strong uptrend or downtrend and continuously moving in a very clean way. However, if you enter more of a choppy or range bound market, these bots can often struggle. And that's why Blackhawk is a really good hedge to more of a breakout or trend following portfolio, as it does really well in choppy sideways markets. And that's why it can be a really good additional tool in your toolbox to help you build robust trading portfolios. So here, I'll just link this in our description, but if you want to come check Blackout out, you can come and flip through the remainder of this presentation and see things which perhaps you wanted to dive a bit more into detail about. You're able to back test it here or buy it with lifetime access for a low price of $250 because frankly, it's only been running for a few months. The track record is not too long yet, so we have to be a bit more economical in price, but price will go up as the performance and the track record gets longer. So guys, please check it out. Let me know how you like it and have yourselves a great day.